Welcome to the July 14th, 2025 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. What a week this week. If you look at the different tariff announcements, and these are important, a 200% tariff on pharmaceuticals coming soon. You had tariffs on Japan, South Korea that started the week with a downdraft, and it just kept going. 50% on Brazil. And we had a 35% announcement on Canada on the final day of the week. What is the S&P 500 doing making an all-time new high when you have all that bad tariff chaos news? Because intuitively, we would think that causes inflation. Let's cover what actually happened and how it relates to real investment strategy, because we've shifted our perspective on the markets. By the way, I'm Spencer McGowan, your financial weatherman, president, McGowanGroup Wealth Management. We gratefully serve affluent clients right from the Crescent here in Dallas. And you can go to networthradio.com, contact us there, and we'll be happy to set up a brainstorming session at your convenience to upgrade your plan. So what was the plan at the beginning of the year? This relates to strategy, and I'm going to get to a pie chart that I don't want you to forget. I want you to remember the pie, so watch for the pie. Anyway, we start the year, we have been raising tactical safety at new highs in the market that really started right after the election. And we used that to get rid of things in the portfolio that were either overpriced, sell part of a successful position, or something that's underperforming. Market makes a new high, but something's not working. If it's not paying me real cash, then what do I have it for, right? If it's underperforming. Well, I better have a good reason. Might be the fundamentals, might be a different target, but most of the time we start to raise tactical safety from the weaker parts of the portfolio or those that may have exceeded a reasonable price target. Boom, tariffs, tariff discussion, real tariffs for everybody. And what happened? Wow, this is the S&P 500, by the way, year to date. Whoa, we had a 20% instantaneous bear market. Felt like it was instant, but it was just from February to April 7th. That was the low. And everybody said, well, yeah, tariffs, it's going to raise prices, cause inflation, economic disruption, and those seem like valid premises. What were we doing in here? We were taking that tactical safety and buying great dividend companies, blue chip names in the portfolios for our clients. Now what are we going to do? Sheriff, there is a new high on the S&P 500 with the worst possible tariff news all week long, other than the fact he delayed it from July 9th to August 1st, but then he said no more extensions. That would have been bad news too. Why did the markets respond so well? Well, let's take a look at what's actually happening that causes this massive buying going in. There's a backstory here that you don't want to forget. This is copper, 50% tariff on copper. Boom, all-time new high for copper, $5.89 per pound. Whoa, that was huge. So if you have a lot of copper stashed, it's probably time to go sell it. Anyway, sell some of it anyway. Here we go. All right, what is this? Microsoft making a new high. Now, NVIDIA made an all-time new high. Everybody loves NVIDIA, best chips in the world. Everybody wants it, but it may not be the right question to ask over the next 6 months. And I'm going to give you some portfolio insights that'll help you to navigate what has become a renewed technology bear market. New all-time high on Microsoft, up 19% for the year. Well, there's a recognition going on that Microsoft, not only on the software space, actually has the best platform, a great platform, not the best, but a great platform for artificial intelligence profitable use. If you think of Word, typing in the spell check, what was that? That was kind of an original AI function. But then you take Azure. Azure actually makes Microsoft arguably one of the best data center companies on the planet. and it was undervalued, and it has a dividend. Not a recommendation for your portfolio till you come down and get a plan, but I'm using it as an example of what powered this week's rally, even in the face of all the tariffs. They're looking forward to say, this is a lot like the 1990s because we've got a big breakthrough. The 90s breakthrough was the PC and Al Gore's internet, and the combination of the two made people more productive. There were more profits, and they actually made more new jobs, not less. That's a key point too. So who's leading the market and who's getting left behind? Palantir Technologies, a 90% gain, arguably a very overvalued company, but one that's delivering. NRG Energy, what is that? The Houston power provider, right? So this is a database frenzy. Seagate Technologies, GE Vernova, what do they make? They make the equipment for power plants, right? You can kind of see the trend here. And Supermicro, Coinbase. Bitcoin hit 118,000 this week, an all-time new high. And bringing up the bottom of this, United Health Group down 40%. Lululemon really stumbling at a minus 38%. And not all power companies are going up. Out in California, Pacific Gas and Electric down 33%. Ouch. Okay, so that's the happy side and the crappy side. Oh, what's this? We got near the lowest inflation. This is the PCE measure, personal consumption expenditures, stuff people actually buy, which is a good measure of inflation. 2.3%. That is a 4-year low. And it happened, where did the tariffs go in? Right about here. And if you annualize these numbers, you're getting pretty close to the Fed's target, both trailing 12 and annualizing the months. That's a wow. So we haven't seen a huge uptick in inflation, a slight one last month. Well, what does that mean for portfolios, right? Safety and income. If I've got high inflation, I should get a higher interest rate. The Fed's overly generous right now at the 4 1/3% for Fed funds and T-bills. But there's other choices in this category. Municipal bonds, high cash flow. That's global lending. If you think of yourself as a bank for just a second, you're getting interest checks from the loans and bonds. You have to subtract off whatever loans and bonds are going to default, and that would be your net return. And banks are a good example. If you want to be the bank, you want a basket of good loans and bonds with a great manager. You drop down into the B space, there's still some bargains there. Safety and income, we want to raise tactical safety, dry gunpowder, because bear markets usually start from an unexpected reason. That's a wow. Here's growth and innovation, growth with income. So let's go a little deeper into the Federal Reserve and the meeting that they're about to have on July 30th, because Trump insulted Jerome Powell almost weekly, saying he needs to lower rates. Now, why would he say that? This is the T-bill rate. Here's Jerome Powell right there. All right, 4.5 to 4 1/4. And so he's sitting at about 4.33 on the Fed funds rate. And he's been stuck there. Notice that. Well, what's happening? In this case, inflation's down here, right? So you could argue that he's too high on his rates. Now, July 30th, Trump was getting ready for that by insulting him again and said he's mismanaging the Fed, including his posh headquarters renovation, which the cost is now running into the billions. And so White House has been attacking him, calling Mr. Too Late, total fool, loser. Then Trump comes in this week and he says, hey, I'm going to go ahead and interview his replacement because he's out of here May of 26. Well, he's going to go ahead and say who that is and maybe even get him an office around Jerome Powell's place. And basically he's going to be like the shadow chairman, and he's probably going to pull rates to here. What happens to bond portfolios? If inflation stays low in the face of all these tariffs, which is a key question, and what do you do in a portfolio? You find a great manager of loans and bonds that'll pay you a big old rate of interest because it's highly likely that this 10-year treasury, which is also at 4.4, it's pretty similar, what's going to happen? You could potentially see lower rates and the net present value of future cash flows, i.e. that big basket of loans and bonds, that could potentially go up in value at the same time you're getting big checks. That may be a lot more fun than sitting through the next tech correction with something that's overpriced. Now, this is NVIDIA. All-time new high, that was part of what powered the market, and everybody's focused on this, but it is our chance to start harvesting some profits gradually, build the tactical safety, so the next time the wheels come off the go-kart, we can get another pay raise. I'm Spencer McGowan, President, McGowanGroup Wealth Management. Thank you for tuning in and subscribing. And by the way, you don't want your kids dependent on you, so send them this video so they can begin to get an education on real investing. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.